Yesterday, we expected that we could get up to $50,000 on Bitcoin. How did we end up? Yeah, basically at 50,000. So why am I saying 46,500? Where is 46,500? You can see it's down here. It looks like it's in no man's land. Why 46.5? That's weird. We can clearly see that there's no real structural support and no real structural resistance around that 46.5. But that's recent indicative price, isn't it? Structure is something completely different. Structure is always mapped out across all of price history. Let's just zoom into this area just a little bit more so we can see what's cooking underneath the hood. Okay, let's pop on the indicator from the service. What does this mean? All of these lines down here, it means these are structural support levels, and these ones are fairly strong. It's very possible for Bitcoin to retrace. Don't forget, the inflation data is coming out very soon. But Ken, the inflation data is fantastic. I've read news reports. Everything is all good. The news reports are saying I should get all in and more. The question is, when you see Bitcoin at this price, do you think that you've missed out? One thing that we need to be very aware of, Bitcoin has come up really substantially and it's battling overhead structural resistance. You can see this is a really light structural resistance at 50,310. It's had a lot of trouble getting through that. Now, does it mean it can't get through it? Of course, Bitcoin is incredibly strong and it is the future of financial markets and systems. Yes, it can get through it, but the question is when. You might notice that little annoying video I'm playing in the bottom left-hand corner of this video. That's there for a reason. That shows you just how turbulent Bitcoin's price action is. If you feel like you've missed out, you'll get plenty of opportunities to buy Bitcoin. Let's have a look at how the Bitcoin market has been going. We're going to go back in a period of time to try to find out how much does Bitcoin retrace when it retraces. I just want to put something on your radar as well. Often we get a lot of volume activity and then very flat volume. When you get flat volume, you can get a loss of investor interest. When you get a loss of investor interest, things can decay down. So just be aware of that. Now, we've seen Bitcoin do very, very well this year, but does it mean it's going only up and it's never coming back down? If you listen to some people, that's the absolute answer. It's never coming back down. But we know that isn't the case. When we were at the top of the previous bull market and all the way down in the bear market, we saw incredible amounts of volatility. When we're in the bear market and the halving is fast approaching, we're going to find that things get really, really volatile. Expect 30 to 40% retracements, at least 2, if not up to 5. Perhaps we can look at it this way. If we go back a little bit in time, we can see a fairly substantial movement in Bitcoin's price. Now, where did this end up? We can see that it really rallied. That is one heck of a rally. And then what happened? It rallied some more. But where did it come back to? Ouch, right down here. Let's just draw a bit of an indication on this chart as to where that is. You can see that retracement just wiped out everything back to this point. When things were coming up and up and up and up, people felt that they'd missed out. But very few people would have believed that it would have been possible to buy in at that rate, and that's quite a lower rate. Okay, let's keep on going. We can see a big rally up. And where does it come down to? Let's just squish this around a bit. Okay, this is coming down to this level here. Okay, let's just pop that in. You can see that that's at a recent indicative price level of once recent indicative price resistance. And look at this. This is a really interesting thing because so many people would say, oh, I missed it here. I need to get in. So let's just do something else. Let's figure out how much these retracements are. That first retracement is a little over 22.5% down. The thing to note is that retracement occurred over 3 weeks, 21 days. What about this retracement, which was about 20% down, just a little over? That took 2 months. These retracements can last a while. Let's zoom out a little bit and put everything into context. When we look at this next rally up, it retraced over the span of again 2 months, 60 days, and it came down a little over 21%. You can see that the markets are inherently volatile. Okay, what about if we go forward a little bit in history? We can see that this is one heck of a move. Let's just pull this down. Looking at that overall positive momentum, Bitcoin came up over 95%, 96% over 121 days, but within the span of 12 days, it came down 21%. It's already gone up from there a little over 30%, well, nearly 31. One thing to bear in mind, price is always moving in a wave. Even in an uptrend, you've got retracements occurring through these points. You don't need to FOMO into anything. You just need to be mindful. The price is always moving in a wave function. Never all up, never all down, just in a wave. Let's look back into history. When we go to May 11th, 2020, that was the last halving. Notice what happened as we approached the halving. It went up and then it just tanked back. Expect things like this to occur again. Also, you can see there's a lot of volatility. People just naturally anticipate, oh, the halving is here. It's going to go exponentially up and up and up and up. It doesn't actually do that. Just to bear in mind, over a couple of days, Bitcoin just before the halving nearly lost 20% of its value. What about directly after the halving? Because we staged a really good rally in there. We saw it come down over 10 days, nearly 11 days, just a little over 13%. Currently, the halving is around 63 days away. There's a couple of ways to deal with the volatility. Being an investor and a trader is a really good thing to do around this particular time. If you believe in Bitcoin and its scarcity, and absolutely, it's a phenomenal asset class, you'll be wanting to stack those sats away for the long term. But you also want to get into your timing. You want to understand when to dollar cost average in, and you should be dollar cost averaging in when you see these big red volume spikes. They're capitulations. Investors are all about time in the market, and traders are all about buying as the price comes down and getting onto the right side of the percentage. When you combine both, that is superb. And you can see we came down here over a little over 10 days, about 13%. And then over 25 days, nearly 26, we came down a little over 15%. Don't forget, a lot of people think as soon as the halving occurs, price goes exponential. In this video, I just want to show you never practically miss out. You can always get back into the market at any time. Look at this particular price action. Whoa, ay caramba, it's just really going for it. That's a big increase. I guess it's now the halving and everything is going to go parabolic. Oh, hang on a second, that's not supposed to be there. This is parabolic. Oh yes, it did go up a little bit further. And then what happened? Oh, that's not very pleasant, is it? What are we seeing here? Just in that particular candle, price came down nearly 13% and just in one day. And we saw a bit of an 8% drawdown and then an in excess of 21%, but over 22 days. You're not going to miss out. This is post-halving as well. We're not even up to the halving yet. There will be a time when things start to rock and roll, but in between there'll be lots and lots of pullbacks. That's why I suggest you be an investor and a hodler and a trader, because what you'll find is that when things start to take off, they're really going to take off. You're going to get a lot of different retracements on the way through, and where you buy is incredibly important. I'll just give you a demonstration. We'll just use this particular point in time up to this point. You'll see that this percentage is exactly why you should trade and also invest. If you bought right at the peak there before the 10% pullback and you just held it for the next 19 days and you managed to sell it there, or you're just dollar cost averaging in, it doesn't really matter. But the concept is it went up 22%. But what if you bought at the bottom down there on that retracement? Is it still 22% or maybe just 23 or 24? What exactly is it? Ooh la la, nearly 36%. Now you're starting to see the truth of percentages. Getting on the right side of the percentage is something undeniably beneficial. Let's go again with this particular one. Say you unfortunately timed it at the exact top and you sold it around the exact top. What you can see, 2.15%, but what is it if you bought all the way down at the bottom, this near 17% retracement? Is it 2% or 10 or what is it? You can see the magic of percentages. It's now nearly 23%. Buying at retracement levels is incredibly valuable for your overall portfolio. And of course, in the bull run, things go parabolic. But they need a lot of things to line up, including government policy and a myriad of other things. So just beware of these issues that all charts are intercorrelated and interdependent, but it's going to be an incredibly wild ride. You'll have so many opportunities, you can see it already. The thing to be aware of as you get into the crypto market, just expect a lot of volatility. You can see big percentage drawdowns over time. That's just kind of the way things work. But over the long term, nothing is better than having Bitcoin. When you start to see very negative price momentum, changes in trend, that's when you need to be a little bit careful. And of course, bear markets have very nasty drawdowns, but we're a long way from the bear market at the current time. Things are looking very positive for Bitcoin. But that doesn't mean it's only up. No, far from it. We're going to find that volatility and price moving in a wave is just part and parcel of Bitcoin's progress inside financial markets as far as adoption. From what we've analyzed, you're in a much stronger position now to weather through any volatility storms. We also know that on April the 19th, the halving occurs. We could get negative price momentum in there as we get so many longs flushed out of the system. Bear markets come because bad actors get flushed out of the system. Retracements occur because there's too many longs. And rallies occur because there are too many shorts. Please let me know in the comments, where do you think Bitcoin is headed to next?